Well, we're thrilled to be able to talk with you about our ag commodity markets. I'm Marlon Bowling with you, and as we look at our markets this time, I want to call on some expert help this time. We want to call on Todd Bubba Horwitz of BubbaTrading.com. He's located in Chicago. And Todd, thanks for being with us. Always a treat to get to visit with you. Let's look at these markets, and then we'll get your take on this. Of course, this is the USDA report eve today, as we put it, but a little softness in the corn. July corn down 3/4 at 326 3/4. I will point out, though, that it's elevating off of its earlier low here. It had been over 2 cents lower, and we're not doing that anymore. December now down 3/4 at 342.5. So from your perspective, when you look at this corn market here, things starting to get even quieter, I guess, as you get closer to unchanged once again.
Well, we're getting ready to open up our gifts tomorrow on the eve of the big report. And again, I think that the action actually looks pretty good. I think that we're going to probably see, a potentially negative report, but I think that we've already seen all that priced in. I can only see a higher move from here. Again, we could get a small sell-off of the number, but I think at anything, it'd be a surprise. And since they've already priced in and there's so much bearish sentiment out there and so many people holding short positions, I have a greater chance of believing that we're going to get a big spike higher off of this number when I watch it. Because again, the price action suggests that we're going higher from here. And I think that the shorts are going to get trapped in this this announcement because it figures to be bearish, but overpriced to the bearish side already.
All right, let's look at the soybean trade here. And after some rumors came out yesterday that maybe there was a little bit of Chinese business in the works, we never got any confirmation of that. And the soybeans did come off their lows yesterday morning, and then they closed relatively firmly during the trading session. Now, today we're higher again. July beans 5 1/4 higher at 868.5. In November, 3 1/2 higher at 880. Now, why the reason for the strength today? Is it still those rumors, or is it technical, or what's going on?
Well, I think it's technical, and I think, again, I think, Marlon, you can only sell things so far into the hole. And now that the economy is opening and we're starting to get some more action and we're starting to relieve some of these oversupplied conditions, I believe that you're going to see them move higher. And technically, they have broken out to the upside. So, again, I'm looking for a run to the $8.90, $9 range and maybe higher than that. I mean, I think we're going to have a big second half of the year in the grain markets. I think the overall selling into these markets and the control that the bears have had is going to start to dissipate, because I think we're going to start to see some liquidity come back, some volume come back, and some trade come back. Plus, I'm looking for some outside money to start to come to these spots as well.
Soybean meal is $2.70 higher right now, and if we take a look at the oil, it's actually taken the minus side here. It's down 13 points. We're now at 28.10 on that July contract. Switching over to the wheat. Now, in wheat, we have July Chicago wheat 2 1/2 cents higher at 507 on the Kansas City market. Now you have July trading only 3/4 higher at 458.5. That's about 6 cents off its overnight high. And Minneapolis spring wheat trade right now is trading 2 1/2 higher. We're at 526 3/4. But it's been a rocky road here on this wheat market here all week long, apparently, the way it has shaken out here early this week. Now, we want to pause right here, Todd, and we'll come back and then we'll talk a little bit about our livestock trade and maybe some of these outside markets as well. We're talking with Todd Bubba Horwitz. We'll be right back.